Looks good.
Okay, something weird on my side, but okay. All right. So thank you, Fausto, so much for having me here today. It's a real treat being here, and I'm sure everybody is going to be taking away so much information from this mega event. Like, I know how hard it is to put these events together. So again, thank you so much for having me here. And today I will be talking about the Power Hour. This is something that I have specialized in over the years. And it's actually about how you can supercharge your trading in just 1 hour a day. I mean, who doesn't like trading 1 hour a day? How about less than an hour a day? You don't have to. Being a day trader doesn't mean that you're going to be in a trade the whole entire day. It just means that you're going to be in and out. 5 minutes, 10 minutes, 15 minutes, and it all depends on the market. It all depends on how the market is behaving as well. So thank you so much, everybody, for being here. Thank you for the introduction. I just want to add a few things here about myself. I have been a professional independent trader focused on trading equities and futures for the last 20 years. Prior to that, I came with 10 plus years in investment banking. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade and also invest in the market. I run two very successful programs. One is designed for income generation. It's the Power Income Futures Trading Room, which I have created in 2017. I also run the Stock Swing Trader program for stocks and ETFs. This service is specifically designed for swing trading, and this was created in 2010, just when Trade Out Loud came about. And like I said, we do offer trading education for swing trading, day trading, and investing. And I specialize in high velocity trades. I will share with you what a high velocity trade. In fact, we did have one high velocity trade yesterday. We traded pre-market. I'm going to share with you what we traded. I didn't put on a trade today. I primarily trade futures for income. It wasn't always the case because I have been a very active stock trader, and I have been trading stocks for over 22 years. And other than that, my accountant said, you're paying too many taxes, and I think the workload on her side was a lot. So they have advised me to actually take a quick look at futures trading. They already had a client that was trading futures. So at first I was a little bit reluctant, but then I was completely sold, and this happened about 10 years ago. All right, so if you guys want to get in touch with us, you could also find us on Facebook, on X, on YouTube, or on LinkedIn for more information. And here's my agenda for today. We're going to talk about the most important time to take trades, and I'm talking about the high odds trade that have the potential to follow through. So why do we need follow through? Because we need the reward, because we need the profits. And if you don't have a tradable void, and if you don't have room to run, then the price action is going to get stuck into resistance. Take a look at, for example, today, the power hour was a mess, and I didn't take any trades today. So it's actually a good thing that when you look at the market, you kind of identify the timing when it's right to be in the market and when you need to stay away from the market. We're also going to talk about understanding risk. Whether you're a stock trader or a futures trader or a forex trader, is always a great idea to follow your risk and your risk tolerance. We're going to talk about reading a chart and plotting a trade today, and also advantages of trading futures. Obviously, I cannot emphasize enough how important it is for you, especially if you're a stock trader, to take a second look at futures trading, especially if you're a day trader. And also, we're going to talk about my favorite time frames that delivered the best results. So my goal for you today is to understand the process, and understanding the process is very, very important. So in order to always be on the right side of the trade, you have to understand where the price is trading at in relation to the trend, trading at to the indicators that you can see here from this chart that I don't use a lot of indicators. In fact, I only use very few indicators. I use the moving averages. I use the 10 exponential moving average, only exponential moving average that I use. And basically I use 3 simple moving averages, and I use the 200 simple moving average, the 50 simple moving average, and the 20 simple moving average. And in order to be on the right side of the trade, I need to have my momentum in sync, not only with price itself, but I need to see it with the charting. So just want to get very quickly right here to, whoops, here it is. I just want to get back into NASDAQ here, for example, because it was the strongest index and because we had all-time highs into NASDAQ. We're going to put it very quickly here onto the daily. I don't know why the chart is so messed up, so I do apologize for that. Just very messy. I just don't know why that is happening right now. Okay, here we go. We're going to try to get it back on track. All right, so sorry about that. A little bit of a glitch in the pattern, but I just wanted to share with you where we are right now in the market. So for example, NASDAQ, the strongest index that we have right now, we're trading into minor support. Basically, minor support is a fancy name for saying a retest into the prior pivot high. So we have a pullback and we basically have a bit of consolidation here. The pop-up that we had yesterday was because of the numbers that came out at 8:30, and today the numbers were not so favorable. So everything is in a limbo right now. But it's not a short, it is not a buy. Why is that? Because the price action is trading within the prior high and the prior low. So as long as the prior high and prior low, especially in a daily chart, is being maintained and the price action is trading within that range, the price action cannot explode to the upside or to the downside. So beautiful upside pattern here in NASDAQ that encourages upside potential, especially as we're going into next week. But there's a thing here that I have to add. Keep in mind that the contract roll is going to happen in NASDAQ next week on Monday, and 2 to 3 days before the contract roll and 2-3 days after the contract roll, the price action is going to become very messy. And be very careful as you're trading into next week, because not only that we have the contract roll on Monday, but we have the FOMC on Thursday afternoon, and on Friday we have the quadruple witch option expiration, in which this contract and the futures indices contract will be expiring. But guess what? They don't expire worthless like in options trading, but they get rolled. Okay, so that's a little bit about the context. I like the fact that we are trading with this beautiful in sync momentum. We're having the moving averages that are fanning out. That is a sign of strength. I use the 10 exponential moving average to show me whether it's a power trend, or I'm using the 20 SMA just to make sure the trend is intact. So as long as the price action is trading above the 10 EMA, this pink line right here, it shows me that the price action is still in the power trend, and therefore shorting is not going to be a good option. And the 20 SMA shows me that the momentum is in sync. So I want to show you something that is divergent to NASDAQ, and that is the Dow right here. So notice that the Dow has already pulled back. So it did not hold a minor support. So we needed to hold the confluence level to the prior high here and to the 10 exponential moving average, plus this fib retracement right here, which is the news line. I call it the news line, which means that if you're getting a power dynamic market, the pullback should only be happening into this confluence support level, into the 44,625, and where we are, the area that we breached was coinciding with the prior high here. And you can see here the difference between the Dow and NASDAQ, right? So this is weaker and the NASDAQ is stronger. Whenever we have divergence happening in the market, divergence in the sense that one index is lower and one index is stronger, there's always going to be a tug of war. So just wanted to put it out there to have a little bit of context of how I read the charts and how these charts, these macro charts, are going to show me whether I could stay bullish or bearish or neutral onto an intraday chart. So it's very important to start with the highest time frame when you're performing your analysis, then take it down. Like, for example, start with the daily, take it down, or the weekly or the monthly, depending on where we are in the month, and then go down into the 4 hour, go down into the 1 hour, go down into the 15-minute or the 5-minute, and find reasons why you should be long or short. So always the charts need to tell you where you are. Because we are trading right now into the doldrum period, and because it is the lunchtime, I mentioned that I do like to mention some time frames that I prefer. I would actually, what I do, and this is what works for me, during the lunchtime and usually during doldrums, if I'm still in a trade from earlier in the morning, and it doesn't happen very often, but sometimes it does happen. So just because I only trade the power hour doesn't mean that I'm going to cut my trade and go to the beach. I'm still going to be stuck in the trade. So with that period of time during doldrums, so I don't get really stuck and chained to the computer, I navigate to a higher time frame. So if my entry was based on a 2-minute entry or a 5-minute chart entry, then I would rather shift to a 15-minute chart, or even a 30-minute or a 1-hour chart as we're going into the doldrum and through the doldrum, so I don't get chopped, because typically this time of the day the volume goes down even more. I've also noticed that, for example, into the futures indices, the volume was actually half the size than what we had in yesterday's session. So very weak, very poor participation. So doldrums, very important. I zoom out always for the doldrum period. And then after the doldrum period, then I could go back to my 5-minute or 2-minute and start looking for a trade that is, I would say, around from 2 o'clock to about 4 o'clock. Within the power hour, and we're going to talk again about the power hour and what it is and what do I look to trade and when to trade it. I'm going to have a little bit of surprise for you, because there are actually 2 power hours within the day. I actually look at the 2-minute and the 5-minute charts for the power hour, and I try to identify setups that are forming on these time frames. And for me, I keep it super simple. If I find a setup, I have a trade. If I don't find a setup, I do not have a trade. So whether, I'm never jumping into trades, I'm never letting, my emotions take over. So it's just pattern, precise, and execution. Also, win more than you lose. This is the #1 criteria for trading, and you can only achieve this if you have a really accurate money management and position sizing skill. Also, analysis is key, and of course, fine and precise execution. You need to look for those identifiable setups, because if there's a setup out there that you have to squint and you have to double analyze, triple analyze, then the trade is not there. You're forcing the trade. The trade should be very simple. The charts need to tell you what exactly you need to do, and very, very clearly. Is it a buy setup? Is it a sell setup? Is it a breakout? Is it a breakdown? Because it's all technical analysis. And remember, it's not just you or me that is identifying the setup. Is the algos on Wall Street, is the institutions, and all the other retail traders out there that are trained to identify these setups. So you're going to have a large group of people that are going to be in the trade at the same time with you. So you're not going to be chasing, because what is chasing or following the footprints of, let's say, Wall Street traders? I hear this saying a lot. Is not really that precise, because you do not want to follow. Following means that the trade has already triggered and you're jumping in at some point, and you're basically losing that strong momentum. You want to be in at the same time, at the same pace. This is my performance portfolio, and I'm sorry I haven't updated it for this month, for the month of November. And actually, I still have just quite a few trades for November. I think I only have the first week of November right here, because I was trading a different account, and I'm actually missing 2 months here, 2 summer months in here. So the account is much higher than what it shows right here. But this is actually your progression as a as your PNL is growing. So this is where we started. January 3rd was my first trading day of the year, and you can see where I am right now. And it goes an up and down and up and down and up and down. So it's not a straight line up, because yes, you will have stops throughout your period of time. I'm trading a $500,000 account. I'm very transparent with my traders, and you could actually see right here that the cumulative return for this year is 637,000, and the gross is actually 711. It's actually much more, but even so, with this older slide that I have, and it's actually from December 2nd, right? I still doubled my account. So what I do with my account is at the end of the month, I take my profits out. And then what I do is obviously I pay my bills, and then a portion of my profits is going to go into my swing trading account, and a portion, of course, I'm going to be putting into my investing account, because compounding, right? The eighth wonder of the world. So day trading is basically income trading, is generating income. You're in and out, you have control over your money. You're either up or down or whatever it is. You are trying to generate income. And on a day-to-day basis, I find that day trading for me works best in income generating rather than swing trading, even though I love swing trading. In fact, I love swing trading more than I do day trading, to be very honest, and investing. But day trading offers me that income generating, that potential to pay my bills at the end of the month and be able to contribute to my swing trading account, contribute to my investing account. So this is what is actually fueling my other accounts. It's basically instant gratification. And this is how you can trade your way to wealth. And this is how I generated my wealth ecosystem, with day trading for creating income and swing trading and investing for creating and generating wealth. Before we go even further, I want to make sure that everybody understands risk. And I get a lot of questions, especially from new traders, and they're asking me, isn't trading risky? If you're first looking at trading and you're going like, oh my God, I think it's so risky, because you can lose on day one, you can make money on day two, and then you can have like a losing streak, and then you get back on on track, and you can have some winning trades. How can you achieve consistency? And the first answer to the question is trading risky? And I always tell people, hey, if you're crossing the street, that is risky, because there could be a car coming out of nowhere that can hit you, right? You're drinking a glass of water, you can choke, right? So there is risk in every single thing that you're doing. But the number one thing that you need to consider is the amount of risk. Are you taking into consideration the amount of risk that you're going to be taking per day? Because in trading, everybody is telling you that you need to have consistency and you need to achieve consistency. That's great. Okay. But the reality is that you need to have consistency in your losses. So you shouldn't be all over the place. Because, for example, a day like today, let's say you put on, let's say 3 trades. I'm just giving you an example. The first trade, if you don't position size, so you don't have no concept of position sizing, and this is very, very common for futures traders. That's why I am, highlighting it in this presentation, because in futures trading, there's this misconception that if you have a certain size account, you're eligible to trade 1 or 2 or 3 or 5 contracts on every single trade. Let's say you have a $50,000 account, you're going to be trading 3 standard contracts, just giving you an example, and you're trading 3 standard contracts in and out, in and out, in and out. This is the biggest problem. 99% of the traders do that. And I'm talking about retail traders. Now, stock traders know how to size. Okay, they know how to size, but in futures trading, for some reason, I don't know why this is happening. So for example, if you're in a trade and you're going to have different size risk for all the indices, Dow, for example, one point is $5. In NASDAQ, 1 point is $20. In the S&P, 1 point is $50, and so on. So you're getting this variety of prices here. So all the prices are going to be all over the place. If you're trading with a standard size contract, for example, let's say with 3 contracts, and if you take on a trade and you're not looking at the distance between the entry and the stop and trying to position size, you may have, I don't know, a $1,000 loss. You may have another trade with $500 loss, and you may have another trade, let's say, with another $500 loss or $300 loss, because your risk is always going to vary. Where in reality, the only thing that is going to vary is your profit. Your risk needs to be the same on each and every single trade. So for example, how do you determine your risk and a risk tolerance? Because these are two different concepts. Risk is actually looking at your account size and establishing a percentage, whether 1% or 2% or 3%. I'm in the category of 1%. I risk 1% on each and every single trade. For example, I have a $500,000 account. I risk $5,000 on each trade. You have a $50,000 account, then you risk $500 on a trade. That needs to be absolutely constant. Now, risk tolerance comes into place if you're trading your IRA account or another let's say account that is higher, let's say, than 1 million or 2 million or 3 million. And you go like, I'm not going to be risking 1% because I cannot tolerate that. Or if you're in a beginner stage and you're just learning how to trade, you have a really big account and you go like, oh my gosh, I can't stomach that 1% or I can't stomach 3%. Then you have to go down and into a size that you can tolerate. So you have to be comfortable. In other words, you have to be comfortable with the loss that you may be occurring. When I first started trading, I had a mentor that said, hey, when you're starting your trading day, you have to make sure that you're very comfortable with losing those hours that you're going to be allocating. And if you're comfortable with losing, let's say 5 hours in a day, then that is your risk tolerance. And that is, how you should be structuring your trading. So risk is correlated to your account size. Like I said, I use 1%. So now that we have this clear and we know, how much we need to risk on a trade, now we have to decide the set amount of, now we have to decide how many contracts can we fit, or if you're a stock trader, how many shares can you fit into that specific size. You could use a calculator, or you can do a cheat sheet that you can have in front of you, especially for futures trading. That is so much easier to have because it's not, like I said, it's not like in it's not like in stock trading. Okay. So now that you figure out how many contracts you need to take the trade with, now you can take the trade. So let me tell you exactly what we have right here. We provide our traders with a risk calculator. Whether you're joining our classes or the trading room, we provide this because we know that if you want to be consistently profitable, you need to have consistency in your losses as well. So your losses, for example, on a $50,000 account, let's say should be let's say it should be $500. So therefore, every single losing trade that you have is going to be $500. It's not going to go beyond $500. Okay. So let's say, for example, you have that $50,000 account and you're going to be risking just $500 on a trade. Let's say you have a risk in the Dow. Let's say you have a 20-point risk in the Dow. That 20-point risk in the Dow, let's say, is a 20 points risk in the Dow. You can take this trade with 5 contracts. So you see, it's very, very different. Where if you would have, for example, if you have a $500 risk, you could actually take it with 10 contracts or 12 contracts. So if you have a loss, that would be a real disaster. Okay, let's say, for example, in NASDAQ, if you have, let's say, a 12-point stop, that will allow you to take the trade with 2 contracts. But what happens if you have, let's say, an S&P trade where you have, let's say, a 40-point stop, and yes, it's possible volatility, and then you cannot take it with a full-size contract, but guess what? You could take it with micros. So therefore, you could take with 2 micros. So this is so super important to know, because again, it's going to be super easy for you to come out from a losing streak. So for example, you have 3 losing trades in a row. You have 500, 500, 500. So for example, if your risk to reward ratio is 3-to-1 or 4-to-1, and if you're catching a trade like we caught yesterday in NASDAQ, then you can make up for those 3 losing trades with only 1 trade. So you have that 1 trade that is going to recover. But if you have a trade where you lost $1,000, another one $1,200, another one $700, it's going to take you probably 5 or 7 trades consecutively to come out of that losing streak. And another very important element is deciding how many trades will you be taking per day. And if you're a day trader or even a swing trader, you need to determine a budget, right? So how many trades, and that is going to be your risk tolerance for the day. So I allocate myself about 5 trades a day. 5 to 6 trades a day, but that doesn't mean that I'm going to be taking and pushing 5 times the buy button or the sell button. Okay, so for example, today I didn't take any trades. I just want to show you the example of the risk to reward ratio right here. So because this is one of the second most important thing right after position sizing. So what you want to do is you want to look for the dominant trend, right? So for example, in here, you can see that the price action was downtrending, and you can see the doji formation. In fact, you could look for some symmetry to the left-hand side of the chart. You can see that the price action got rejected at the 10 EMA here, got rejected over here, got rejected over here, actually broke down. So actually the price action is very responsive to this 10 exponential moving average. So if you didn't catch a trade here, you waited for the rebound and you get this doji. Dojis are, you guys know, I don't need to tell you, but dojis are a wealth of information. They show us indecision, but in reality, they're deciding for us. Because if a doji lines up, for example, like in this particular spot, it's going to be bullish above, or it could be sell set up below. So it could be bullish above or bearish below, and it's going to set the stage for the next time sequence. This is a 15-minute time sequence, 15-minute time frame. So basically, if we would have traded, if this candle would have taken out the prior high, we would have gone higher and broke this downtrend right here. But no. I waited for a little bit longer for the confirmation. This is actually a trade that we've done in the trading room. So I waited a little bit longer for the confirmation. I didn't really get it at the bottom of this candle here, but I got it a little bit lower. It is fine. And you can see here that this is, I had to wait a little bit until the trade started to work. So basically this is my entry and this is my stop right here. It shows short below and stop right here above. My first target was actually the first pivot, the bottom of the pivot right here into the prior price action. And my second target was determined by a higher time frame that was marked on the chart from earlier. And you can see here that with this trade, I was able to achieve almost 3 R's, right? So this was my risk and this is my ultimate reward right here. And my exit was somewhere just above this little rotation right here. So always strive for 2 to 1 or 3 to 1. Never strive to have a 1 to 1. For example, I'm risking $100. I want to make $100. That is a recipe for disaster. Okay, so here's another setup that we had also, and this is a strong consolidation. Look at the price action. This is on the other side. This is on the bullish side. So the price action is pulling back into the 10 EMA. So what does the 10 EMA show me? All right, team, guys. All right, it's showing me the power trend. Okay, so it's showing me the power trend. So you could see it right here that the price action rotated. We actually had a buy setup setting up from the 10 EMA. The bottom of the pivot becomes the stop. The trigger point becomes above the prior red bar high. And here we are. We had a pre-planned exit right here. So this is easily a 2-hour trade right into this resistance right here. And this is, again, the power hour. So it's a quick snap into the power hour. So if you want to start trading, but you really don't know where to start, I can actually show you. And hence the name Trade Out Loud. I trade every single day with a team of traders and I show them what my trades are. I share the entry, the stops, the targets. I share the not only that, but how to size into it, the market conditions, the market structure, and not only that, but I do that all live on the mic. And you know what else I do? I trail my own trade live on the mic in real time with all my members. And not only that, but I mentioned if we need to take partial profits, looking at the momentum and dynamic in the market, or if we stay with the whole entire position, because how valuable is that not to leave money on the table, right? And where we trail. This is actually, you could trade from anywhere in the world. If you have an internet connection, it's actually my boat right here. I'm in beautiful Boca Raton, Florida. And 5-minute workday. Okay, so let's talk about how would you feel just trading 5 minutes a day, right? That would be like super cool, right? Well, I'm true proof that we could definitely do that. This is actually a CPI number that we were trading, I think, in August. And take a look at this bar. This is the comments that I made in the trading room, and this is where the price went. Actually, in here, we had synchronicity. So we had levels for YM, S&P, NASDAQ, and Russell. I presented the key zones that we needed to trade above. And instant gratification. So that means that the price action achieved targets immediately. Okay, so here we go with comments on the price action. How about an example from yesterday, right? Yesterday, you could see here that I posted this chart in the room. We had a level here. You can see it at 459 and change. And I said, game plan, bullish above. I shared the charts right here. So traders in my room understand the context, because you need to have confidence in the pattern. I'm just not mentioning, what I like or what my emotions are, vis-a-vis of a trade. No, I actually present exact facts from the chart. So this is the game plan. So the game plan yesterday was bullish above 460. The setup does not have odds because we were still in the pullback process on the daily. So it's a 50-50 shot. Resistance is right in the trigger. That's why it's a 50-50 shot, because this was resistance right here and we were looking for a break of resistance. None of the indices have a clear void into targets because we had a bunch of resistance because of the pullback. Two stop levels to watch, 420 and 400. We actually had them right here. The last one was right here. 1 minute to go. Target one achieved a few seconds later. If trading more, stop as soon as possible at break even. And you can see here all the comments, 500 in the back, trailing 500, momentum still strong. We are up 1.5 hours, trailing 520, and you could see what happened. This is also, I love trading the CPI numbers or the PPI numbers whenever they came out. However, today I did not trade the numbers because the context was not right. The context was not lining up with anything. So this is, again, another example of a 5-minute workday. This is before even the market opens. These are quick 5-minute trades when these numbers are out. And you can see here, good morning team, NASDAQ and S&P already trading into all-time highs. And I'm presenting here the game plan. Well, the Dow bullish over 860. These are the targets. NASDAQ bullish over this level. These are the targets. CPI number in 1 hour. Caution, extreme volatility will hit the tape by FOMC day today as well. So that was a doozy there. Okay, so you can see that every single time when we had these numbers line up, we made it a really big success. So this is another example here. This was from August 13th. So you can see I showed you an example from today. I showed you an example from earlier in the year. So this is 52 points in 1 minute. That's $1,000, more than $1,000 per minute per contract. And if you position size, this is going to be it could actually be a really massive trade. So why do I trade for a living? First of all, I don't have a boss, and I don't need a boss. You are your own boss. You decide your hours, your time, when you want to take a day off or whatever you want to do, you are the boss. You don't have any commutes. And one of the reasons why I was driven into what I'm doing right now is the commute time, because I was working at an investment company, huge investment company. It was also a boutique that we dealt with only high income clients. And I had really long commute hours. I loved what I was doing, but a long commute. So I just said, you know what? It's time I learn how to do it on my own. And I jumped into day trading. No customers, no clients, no emails. It's just you and your trading computer. And I could teach you how to do that. I do this every single day. So it's time to turn your computer into your personal ATM. But again, it's going to become your best friend, your personal ATM, only if you know what you're doing. So this is the perfect time to learn how to trade your way to financial freedom. Why is it now the best time? Well, think about this. We're at the end of December, and ask yourself, what is your P&L saying about you? Are you massively up? Have you doubled your account? Have you tripled your account? Are you down in your account? Have a really close look at your account and actually, take a decision. Because if you're doing the same thing, if your account is down, if you're doing the same thing over and over again, if you want to switch to something different, it's time to switch to something different, right? Then it's time to ramp up your education. So the market is a permanent transfer of wealth from the novice trader to the astute trader to the educated trader. The markets will remain super volatile through 2024 into the end of the year. Ukraine, Russia saga will continue. Israel, Hamas war, you guys see it in the news. They're continuing. If FOMC rate cuts, we have an FOMC rate decision next week, next Wednesday. Inflation is still super high. Massive layoffs will continue, guys. And continue. I don't know about you, but I'm looking and seeing a lot of layoffs, and I'm reading it in the news. And of course, who doesn't look forward to the trade wars? If you have been trading in 2016 to 2020 when Trump was around with the trade wars, or when he was speaking, you were missing out, because this is where the volatility, and it's the good type of volatility when that happens, because it's the volume plus volatility. You don't want to have volatility on low volume, right? Low volume volatility is not sustained. So you can get caught in the trade can trigger for you, and then it can stop you out immediately. So you want the good volatility. So what you need is really good education. I don't care where you're getting your education, but you need to have solid trading education. You're trading against or with the most brilliant minds in the market on Wall Street. And in the world, that is. You need to have a lot of discipline, patience, and focus. A lot of traders say, I don't have patience, I jump in the trade. If you would have education, you would know when you need to enter in a trade and when you need to sit on your hands. So here's why some traders fail. Well, it needs a doctor is required to have 7 years of school, trading and license. A lawyer is required to have 4 years of school, law school, and bar exam. A pilot needs about 3 years of school, plus trading time and license, and an engineer 4 years plus training plus PA exam. So what does a trader do? Well, no experience, no training. He wants to start tomorrow, opens an account, and boom, jumps into Apple or jumps into NASDAQ. Long or short. You need to have a burning desire. How badly do you want this to work? So for example, for me, I had a deadline. I had about 6 months to make it work, because I quit my job not before getting like tons of trading education. And back to when I started, you need to travel to get that trading education. I went to New York to get some classes. I went to Fort Lauderdale to get some classes. I went to Vegas and got some classes. So I got classes because there wasn't much online presence. There was only a room, I believe it was .com or something like that. And I was in a chat room, I remember then, with my first mentor. He doesn't trade anymore. He's pursuing actually a career right now as a writer in Hollywood. But he was a phenomenal trader, and it was one of those stories, rags to riches, made millions in the market. I'm so happy that I had him as one of my first mentors. Bottom line is that you need to have that burning desire to be successful. You need to have really good role models that made it in the world of trading, and if you're lucky enough for them to share with you their methods, that is outstanding, because you want to fast track your trading. You don't want to go through the route of trial and error, because at the time when you're finally getting it, you would be out of money. It's a strong possibility that you could be out of money if you're getting through some market shift and you don't adapt your trading, because that is one of the biggest things, especially when the market is going from bullish to bearish, or bearish to bullish, or it's sideways. That is where the most money is being lost in the market. You need to have really good, solid education. And I'm not just talking about foundation. You need to know a lot about the market in order to make it to make it work. Discipline. Why discipline? Because you need to follow your plan. You need to have a trading plan. you're looking at a person right now, or might as well you're hearing a person right now that really did not believe in a trading plan the first day that I started to trade. And then I quickly realized like 2 weeks later that, hey, I was all over the place, and I started trading day trading stocks. So I was trading gaps, I was trading continuation plays, I was all over the place. When you first start trading, you need to specialize in something. That's it, in one single thing. And then you add on. Once you become really good with that thing, then you add the next, and then you add the next. And you need to have the patience to wait for the setup, patience to wait for the opportunity, because you're not going to get opportunity every single second. And you need to wait for those trigger points, because those trigger points are confirmation points. Focus, no distractions. When I'm trading, I'm just shutting my door to my office. I don't have the phone. I'm not watching TV. I'm not listening to radio. I'm just focused on price action, because I just trade the power hour. And you need to have conviction, and you need to have perseverance. Just keep at it. Okay. So because I'm a futures trader, the futures day trader and swing trader, this is everything that you're looking to trade. However, I just trade these four little guys right here. The Dow, the S&P, NASDAQ, and Russell are my go-to. These four guys are my employees. I send them to work every single day for me. I just tell them, find the best possible setup. So when I start my day, I don't start my day by saying, oh, I need to go in the market and make $10,000 today. No, what I do is, oh, do you guys see the chart or the screensaver? What do you guys see? Okay, sorry. Do you guys see the chart? Do you guys see what I'm sharing right now? Just a quick check. Just because I just saw a comment in the room. Okay, cool. Okay. Thank you, thank you. Because it has happened to me. It happened to me before. I'm like, oh my gosh, nobody saw a slide. Okay, so these are my employee guys. So I was saying, like, when I start trading every single day, do you guys think I come in the market and say, oh, today I'm gonna make $10,000? No, I want to make 10,000. No, when I start my trading day, yeah, exactly. Thanks so much. When I start my trading day, I say I have to find the best possible setup, because I know that if I have the best possible setup, I know that I'm going to have a trade. And if I see the market all over the place, then I'll like, blah, it's not going to be a good day. Then maybe I should consider reducing my stop, reducing my risk, right? So instead of that, remember $500 that I would risk in a day, maybe I'm gonna cut it in half, because the risk is too high. The market is so choppy. So why go for a full R when I could risk half an R? Of course, you can trade like crude oil. I don't trade everything that is on the panel. In fact, this morning I had a question in the trading room about oats, about trading oats. There were only like 40 contracts that were being traded today. So it was just ridiculous. The amount of volume that the oats have is ridiculous. So nobody's trading them. But anyways, and by the way, coffee and orange juice are leaders this year. I don't trade them. Okay, I don't trade them, but I would rather trade stocks. So I swing trade a lot of stocks. By the way, gold, yes, I traded. In fact, we are still in a trade in gold. This week we initiated a trade in gold at 90, I think it was, and then it hit two targets at 20 and 50. And now it's pulling back, so we have a trail stop in it as well at break even. But we achieved two targets. We're very diligent, and we moved the stop on the rest of the trade, the rest of the position at break even, so we don't lose. Because trading is a rule-based system, so you need to have some rules, right? You need to know when you're getting in, when you're going to move the stop, when are you going to take some profits into target, because it's not like one trade fits all, right? Because if you're having a strong momentum, why would I take a profit at target one when I'm seeing that the price action is zipping through target one? And when you see that the price action is literally so strong that it's approaching the target, it doesn't show signs of slowing down. So what I do in this case is I let the price run, I let it go higher, and the more it gets higher, then I put a little trail stop for a portion of my trade, exactly where I needed to take, let's say, half the size out or a quarter of the size out. So that's what I do. So you need to have a system. You need to have some rules that are very easy to follow. And all these rules need to be in your trading plan. And the moment that I understood that, yes, I need to have this trading plan to make it easier on myself, then you're good. And your trading plan needs to be so simple that if you give it to your next door 5-year-old kid, he can trade it. Okay. Also, finding high odds trades. Finding high odds trade is about the structure of the market. The trend is very important, and it's about finding the tradable void. So for the possibility for price to escape from where it is right now or from the trigger point to a next target, and it needs to be a wide void. Because if you're having, let's say, a trigger that is coming in very close to a resistance zone, which would represent your target 1, then the price action could poke a little bit higher. And because it doesn't have the wide tradable void, it could go a little bit towards that first resistance and then go back actually and stop you out. So you have to wait for the setup to clearly form. And if you don't have a really clear setup, don't take the trade. Actually start loving your money. Don't waste your money on, spending it on a really low quality trade. Money management is very important. And mindset, guys, mindset is so important, because it's one thing to have like a millionaire mindset and say, hey, I'm just coming every single day to find the best possible trade setup, versus the welfare mindset. It's like, oh, I hope I can make money today. Oh, I really need to make some money today, right? Because you can feel the pressure. So now we're going to talk about the power hour and the power within the power hour. So in day trading, the term power hour refers to specific periods during the trading period when there is typically a surge in trading activity, and what else, team? Volatility, right? So one of the best times for market to move is actually the power hour from 9:30 to 10:30. Why? Because the market is going to react to the overnight news. It's going to react to the economic data. It's going to react to other market moving events. And of course, it's going to react to the triggers, to the technicals. It's going to react to the trigger. It's going to react to the trend. It's going to react to the tradable void, right? So if it escapes into a tradable void, that's fantastic. But did you guys know that there is a second power hour in the day? And that is in the afternoon from 3 o'clock to 4 o'clock. So during this period, traders make those final adjustments to their positions before the market closes. And the afternoon power hour can be also influenced by the end of the day order execution, portfolio rebalancing, and other strategic trading decisions. Now, best times to trade, okay? 9:30 to about 11:30. And this is my, kind of like my zone here, my trading zone. But my favorite time is actually from 9:35 to 10:35. And that is my personal power hour, because you're getting the most volume, the most volatility, and the news momentum, which means that the market is going to react. Worst time to trade. Stay away before any economic release. Stay away a couple hours before the FOMC, because the market ahead of FOMC has the tendency to base. So those bases are not going to work, because oftentimes as you're basing into FOMC, you're going to see a glimpse, right, up or down. They're going to do the shake and bake. They're going to trigger you in and then stop you out before the big move occurs. And then, of course, the last day of the month. And option expiration, I mean also every single option expiration that is out there, including the quadruple witch option expiration. Rarely that I have seen like a really great trading environment on those days. Okay, so what I'm going to share with you right now, I see that I still have about 9 minutes left. I'm going to be sharing with you the hybrid Elliott waves and timing. So like I said, my favorite time to trade is from about 9:30 to about 11:30. However, my favorite time is from 9:30 to about 10:30. So it's this segment right here. If you're having a bullish market like we had yesterday, you can see the continuation through 10 o'clock. And if you still and during this time, every single trade that you have from 9:30 to 10 o'clock is quick, in, out. So if you're in a trade here more than I don't know, you shouldn't be more than, let's say, 10 minutes or 12 minutes, 15-minute tops into this timing interval from 9:30 to 10 o'clock, because the volatility is going to swing the price really well, up or down. From 10 o'clock to 10:30, this is the pullback time. Typically, this is the time when I watch to see what the market is doing. It could be 10:20 to 10:30. And if at 10:30, we're seeing signs of strength, if this pivot right here forms, and if we're not seeing a revisit of 9:30 low, then boom, this is your second chance to get in. But this time, you could get locked in the trade for a longer period of time. This is my favorite part because it's so quick and it's a gratification, but this time can generate more profits, but you're going to be locked into trade for more, 30 minutes or even an hour. And I have some tips for you guys. Treat your trading activity as your business. Trading should be rule-based and boring every single day. Focus on the strategy and don't trade the P&L. Exactly, focus on the chart that you're trading. Again, don't look at the P&L fluctuation because you have a trading plan. No egos, no crying in trading, no throwing his computer out the windows. Trading is trading one day at a time. It's not a get rich quick scheme. Having a well thought process. Number 7, love what you do and trade for the right reasons. Number 8, have a winning mindset. We talked about this. Always improve and study. 10, reward yourself. Always reward yourself. I reward myself every single month when I make money. And of course, number 11 actually is patience. It pays for you to wait for the right entry. I have a special for you guys. I thought I would share it. I didn't even know that I would share this with you, but we are almost full here at capacity with this course, and I didn't want to leave anybody behind because this is something that we have never done before. On Monday, we start the Power Income masterclass. So what that means is that you're going to have 90 days of Power Income Futures Trading masterclass with me, which includes not only the day trading aspect, but the swing trading course that we're offering for free. And this is a $4,999 value. And I'm not kidding you. We sell this. If you go to our website right now, you're going to see a different tab with the swing trading course that is for free. This is a year-end special because we have such an amazing year that this is my way of giving back to my traders, and everybody that was enrolled in the course before is going to get access to this. And also, if you're new, if you're just joining, you're going to get access to the best of the best. We have been voted best in the industry by Benzinga for financial literacy. And this December class is going to be bomb. It is live. Thank you so much. It is a live class. We're starting actually on Monday, December 16th through the 20th with the day trading Power Income. It's live. We're also going to continue from January 6th to 10th. It's also going to be a live class, Future Swing Trading, and you're going to have access to the trading room until March 31st. I also want to share here, I know I wanted to do the trading room for you guys, but here it is. Okay, this is a special offer. So if you want to enroll, this is the link. You're basically going to get lifetime access to the course. So not only that you're getting into the course, and you're, just, taking it for the first time, you're hearing me, teach the course, but you're going to be grandfathered in this course. So every single time we host a live course, you're going to be present at this Power Income Futures course, where it's going to take you from zero to hero, from student trader to pro trader. You're also going to receive the manual, the e-manual, which is over 600 pages of education strategies, trading plans, and more. You're also going to receive the on-demand recordings, which are yours forever. Nobody's going to take them away from you. They're yours forever. You get unlimited live retakes with us. You get 3 months of access in the trading room. You're going to get access to a private X feed. You're going to get the platform layout, student personal support, risk sheet that I just showed you, and of course, the swing trading course that is going to be included. It is crazy. We've never done this before, and we're never going to do it again. The total value of the package is actually $36,000. and now it's $59.99. It's basically, if you break it down to 365 days, it's $16 a day. $16 a day for you to become a master trader. So this is the only place where you can learn how to trade like a pro and earn while you're trading every day live with us in the trading room. So I just want to share, I think I have like 1 minute left or 2 minutes left. Just want to share with you, this is the page that you guys, excuse me, that you guys can use to sign up. And you have a lot of details here about the swing trading course, what we offer, et cetera, and what we teach, by the way, if you're interested in what we teach. And we teach actually a lot more than what we have over here, way more. Okay, but this is just, you know, a glimpse of what you're going to get. And also with this, you're going to get access to the performance portfolio to see where we're at. This is my personal portfolio. So this is a tracker that tracks every single trade from January to I don't know, to current, by, let's say, by contract. And you could see the totals here, the percentage growth or loss here, and also the monthly performance. This is my personal stats. So this is tracking per contract. This is a tracker, okay, per contract. This is with position sizing. This is what I do for you know, for this is what you would get for excuse me, if you position size. This is with $5,000 a month position sizing. And you can see the results right here: 62,000 here, 31,000 here, 39,000 here, 18,000 here, 168,000 here, almost 169. 119,000. So it depends on the month how much you made by position sizing. You get risk management here as well. You get 2 calculators for stocks and for futures. You get rules, you get guidelines. We also have funding, roll dates. You have the year-to-date stats right here. You have some limit down information, a quick course on that. You have OPEX, option expiration days, and so on and so forth. You have layouts. For the Thinkorswim that I'm using, provided by Schwab. You have charting as well, holidays. You have indicators to use. You have Fed Watch tool. You have some videos here. You have miscellaneous information, so you can get a lot of things out of this. All right, so if you have any questions, I'm just gonna take, I don't know if I have time. Okay. All right. I think my time is up, but if you have any questions, shoot me an email at info@tradeoutloud.com. Okay.
Thanks a lot, Anka. I really appreciate you being here and everyone take her up on our offer. And like I said, she's had her here for so many times. And, you know, and also I did like I said, we interviewed her and we have other events like her, but to try to definitely try. I love her power hour. It's exactly when I do it.
Appreciate the opportunity. I'm kind of excited to talk about. It's a little bit out of left field, but I think it's the biggest discovery I've ever made. I'm going to go ahead and turn off my video and share my screen. Let's make sure we got that working. And everybody can hear me okay and see my screen. Let me know when that works, and then I'll get started.
All right, we see everything fine.
Cool. All right, so I started trading live really on a daily level in 1997. So I've seen a lot of different changes in the industry. I had a very eclectic career, so I've had a chance to work with people from all different walks of life. And I got really frustrated with a number of ultra high net worth clients, really smart people who had accomplished massive things in many other